Hey, what's good? How's business? How's things going? Welcome to another episode of Business Savvy Sundays. I'm so excited to have you here. Um, this episode is actually in response to a question that was posted in the comments of a previous episode. So I'm excited to get that in for you. So the topic today is how to record my money put into my business. That was the easiest way I could come up to summarize that statement. So I'm going to read the viewer question and then I'll get into the topic. The question is, how are financial donations to a business recorded? Are they considered profit for the business that receives the donation? If no, under what classification would financial donations fall under the business receiving donated funds? Well, simply put, I want to make sure that we're talking about donation. I'm thinking if this person is saying donations, we're going to segregate and first talk about donations from other people. If somebody wants to support your business, they should be buying your product or service. Normally, a person would not just donate money to your business. It's not a correct way to record that because it's not a charity. You can't give them a tax deduction. They could give it to you personally, and then you can contribute it as an owner, which is what we're going to talk about next. But if someone wants to support your business, they need to buy or support your product or service. That is the simplest way to put it, because there is no category for donations to a business necessarily. But if it's your money as the owner, we have an answer for that. That is called contributed capital or owner contributions. That is a specific category in the financial statement, specifically in the balance sheet. There's a place to be as an owner where you invest in your business, not to be confused with a loan. I think I'm gonna make another whole separate video on that, on business loans to yourself, because there's a whole set of circumstances that has to happen for that to be recorded properly. But contributed capital is something that's very common. As a business owner myself, when I started my firm and started doing things as a business and setting it up, I had to contribute capital. Capital is money from my personal account into my business account, which came from my regular paycheck into my business account to kind of get things going until I started making money. But there are a couple of things that you need to be able to properly record that. And number one is going to sound very familiar if you watch my other videos. You need a separate bank account. Because how can you contribute money to yourself if it's all in the same account? Again, if you formed an LLC or any other kind of separate entity, definitely legally need a separate business account so those transactions can be clear. That's self-explanatory. You can go back and watch that video. I'll link it below if you want to talk about why you need a separate business bank account. Number two, it must be an actual transaction. Sometimes I have business owners who are trying to say, well, it was kind of about $500. No, what was the actual transaction? That means it has an amount, it has a date, and it has what the transaction is. So it was a check that was put into XYZ account, or you took cash out of one place and actually made a deposit. It has to be an actual transaction to be counted as a owner's contribution. And it must be recorded as an equity transaction. So money that comes from you personally as an owner is not business income. So that kind of goes back to some of our previous conversations where we talked about your personal funds propping up your business and the intermingling. You cannot clearly see what your income and profit is when things are commingled. So there's a specific way that owner contributions are recorded, and an accountant as myself or bookkeeper could help you record that properly. But it is not income. It goes into the equity section of the balance sheet and sits there as owner's equity. and it balances out that asset liability equals owner's equity equation. So I'm going to make another video because this is kind of a complicated subject, and it's kind of an extension of some of the other conversations that we had. It's about how to run an unbootleg business. It is very important that you're clear about where the money that is coming from that supports the transactions and the expenses of your business. Number one, we want to be building profitable businesses, and you need a business idea that generates income enough to cover the expenses. Definitely in the beginning, I would expect some owner contributions, but those also need to be recorded correctly. So I know this is a quick video this week, but I think it's important enough that we take a moment just to think about how we're setting up our businesses to make sure they're correct and legal, but also to make sure the transactions between yourself as a business owner and the business are very, very clear. When you form a business, and especially if you've legalized it as an LLC or any other structure, you're actually forming a separate entity. It becomes a separate person in and of itself. So I know it can, in your mind, get mingled together because you're passing money from one pocket to another. That is why that separate business bank account is so important. So when the IRS or loans or whoever, loan applications, whoever is looking at your financial statements, they need to see those clear lines that veil, as we call it in the accounting profession. They need to see that as clearly as possible. So I ask you, I advise you, I encourage you, as we've talked about in the past, that you set these things up in place. It's easier to do when it's small and you're getting started than when it's down the road and money's all commingled and we can't figure out what's what. So that is a quick and dirty episode of Business Savvy Sundays. I want to record a couple of other videos to talk about loans and also how to get money out. So we'll talk about that. But thank you very much. And as every week I say, go forth, prosper, do great things, and continue to serve the communities in which we live and serve. Bye-bye.